Savers are unwittingly gifting the banks higher profits by failing to put their money that's on deposit into higher earning savings accounts. There's something like 152 billion euros in household savings in banks and credit unions. But most of this is in accounts that are paying no interest at all. It's either in current accounts or so-called overnight accounts where you can take the money out at short notice. Those accounts generally earn about 0.12% in interest, so less than 1%. But if you put money into a term account in a bank, you could be getting up to 2.6%. All the banks have a selection of higher rate accounts, but you have to leave the money on deposit for a while, otherwise you don't get that rate. So they're called term accounts, where you leave the money for a period of time. So the failure of people to move their money out of these overnight accounts and these current accounts is gifting interest rate advantages to the banks, because they just take that money and put it on deposit with the European Central Bank, and they earn 4% from the European Central Bank. So Davy Stockbrokers has warned that this failure of people to move the majority of the household savings out of accounts that are paying very little interest into better accounts is gifting the banks huge amounts of extra interest income. Davy reckons that this year, for last year, Bank of Ireland will make profits of 2 billion euros and AIB will make profits of 2.1 billion euros. And this is because 96% of the money on deposit in the banks is sitting in these accounts where the banks don't have to pay hardly anything at all. So savers are unwittingly helping the banks to big, fat profits by failing to move their money into accounts which would pay them more money.